We have Brian Marshall with us on the phone right now, who wrote that report saying that Cisco may, in fact, cut up to 5,000 jobs. Brian, thanks so much for joining us on this. And what tells you this, that they may be in for these cuts?
Thanks, Betty. Yeah, I think if you look at the last 4 quarters, Cisco's revenue growth has essentially been flat. However, their headcount has grown 4%. So clearly, that's an unsustainable trend going forward. And I do think that Cisco is preparing itself for a pretty large RIF or reduction in workforce over the coming weeks, and we think this probably happens sometime in early August is our best guess.
Brian, it's John Erlichman. Obviously, one of the reasons for this is the spending that was coming from the public sector is totally gone. They've gone from positive growth to negative growth. That's one of the reasons John Chambers is making this move. But as for these job cuts, where are they cutting? They have a lot of layers of management. It's always been a knock against Cisco and John Chambers that he has just too many managers and too many different empires within the company. What are you hearing about where these cuts will be specifically?
Sure, John. I don't have that level of granularity per se. However, if we would like to speculate, if you look at the first 2 things that the company's done recently with respect to their restructuring program, number one, in early April, they talked about cutting back on the consumer business, so shutting down Flip Video. So we do think some of this headcount reduction will come from the existing consumer businesses. And the second thing that they did in early May was restructure the overall management organization of the company. So we also think this is going to be targeted kind of mid-level management, if you will. So again, to summarize, we think that these cuts probably come more on the consumer side as well as sort of mid-level management across the board.
Hey, Brian, it's Dominic here. One of the huge stories behind Cisco has been how much they really have been an underappreciated stock. Every time their earnings come out, they beat, and every time investors punish their stock. At what point does Cisco stock or Cisco as a company become attractive again to investors? At what is there a price level? Is there a management structure? What's going to be the catalyst for the upside at Cisco?
Sure. Yeah, the valuation is pretty anemic, especially on a free cash flow basis. We actually forecast free cash flow multiple to be roughly 5 times for calendar 12. So that's one of the lowest amongst the large cap tech companies. Right now, we do maintain our neutral rating. We think that the risk reward is fairly balanced with roughly 20% downside to $13. That would basically be taking kind of a low multiple of 8 times, downside calendar 12 earnings scenario of $1.60, again $13. And on the upside, we think roughly it's 10 times our bull earnings case of $1.90, so that would be $19. So until we see that risk reward become more positively skewed to the upside, we're going to keep that neutral rating.
John Chambers is hosting the Cisco Live event tomorrow. So do you expect him to say anything that could, maybe change that risk-reward profile?
That's a good question, Betty. I think there's going to be a lot of eyes on John's keynote tomorrow, and I think he's going to be talking about the strategy and just update us from a product perspective where Cisco is. I don't expect anything from an overall strategy perspective relative to the financial model, which is going to be the key driver of Cisco shares longer term, how they're actually going to fix their issues. So I don't think there's going to be any, stock, driving or material catalyst tomorrow out of his keynote is my personal view. I think a better forum for that will be in September, probably at the company's annual financial analyst meeting.
Well, Brian, it's John again. What do you think he'll say about the growth estimates for the company? Because last time he was on with Betty, he was pretty clear that, yes, they'd taken their long-term 12, 17% growth expectations off the table, and that because they're doing all these cuts right now, it's going to take a few quarters before they know exactly what a realistic growth target is. Of course, you're saying in your note today you want him to come clean and give a clear growth forecast, but his concern is, I don't know what that's going to be for a few quarters.
Well, I think that's a good point, but at the end of the day, they do need to set a long-term expectation for the investment community. Again, that 12 to 17% is off the table. If we do look at what the company has done over the past 5 calendar years, on average, it's been 11% annual growth. So I think that they'll go to 10% plus or minus, call it 300 bips or 3%. So I think they'll give a pretty wide range, but I think in the near term probably be at the low end of that target model, and over time, would look to be at the sort of midpoint at 10% is my view.
So bottom line then, Brian, are these job cuts that you think are coming, are they going to move the needle on Cisco shares?
Well, I think it's a step in the right direction, Betty. At the end of the day, what's really going to drive Cisco from a stock perspective, I think, is going to be getting how is the company going to get back on track? What is their sort of strategic plan? and what are we talking about from a long-term earnings perspective. So I think those things will get clarification in September.
Brian, thank you. Good to talk with you. Brian Marshall of Gleacher & Company.